All right, what's up? Congratulations, because you are interested in your financial future. I really respect the fact that you are interested in learning about the best financial decisions that you can take right now, and that you're giving yourself the opportunity to expand yourself into how money works. All right, I really respect you for that, and congratulations. So, today we're going to be going over a financial analysis. You're going to be completing a financial analysis on your own. To determine how much of life insurance you need and whether or not you even need any. No pressure. There's no pressure. You're going to be doing it on your own. I'm going to be walking you through it right now. There's no pressure. There's not gonna be no sales pitch. You know, I'm just trying to inform you and educate you, and make you realize how much of life insurance you need or whether you would need any. So first, I want to establish something. So you're probably thinking right now, if you don't have a family, you're probably thinking, why would I need life insurance? Right? You don't have a family, you're on your own. So why would you need life insurance? Well, what if you get ill? What if you get chronically, critically, or terminally ill, or you get into an accident and you can't work? You suddenly can't work. You know, you're gonna need money. You're not gonna be able to work. You're gonna need money. So if you get ill or if you get into an accident, and you have a policy in place, you're going to be able to tap into that amount of money to cover for your expenses. And that is why you would need a product or service that we are offering you. Also, you're probably planning on retiring, right? And you probably don't want to retire at the age of 65. Because at the age of 65, let's be realistic, you're almost dead. So the sooner you start planning for your retirement, the better. And the sooner you start planning, the sooner that you can retire. So if you don't have a family, that is why you would want to have something like this in place, an annuity, a fixed index annuity, a life insurance policy, a term policy, or a permanent policy. It's really important for you to have this. But, however, if you have a family, and assuming that you're the main provider of your family, it is crucial for you to have something in place for your future and for the well-being, for the financial well-being of yourself and of your family. Because think about it, what if you die? Assuming that you're the main provider of your family, if you die, is your family going to be protected? You know, you probably have a mortgage, you probably have a house payment and everything. So you want them to be protected. You want your loved ones. You want to protect the quality of life of your loved ones. And so it is especially important for you to protect the quality of life of your family and have something in place for you. If you die, it is costly to die, so you want to protect them, and you don't want to leave them in debt. If you get ill or into an accident, you can't work. You are the main provider, so you want to have money to provide to them, to keep providing. However, if you live a long and happy life, you want to have money because you want to be able to retire with a peace of mind. All right, so we're gonna be doing a financial analysis, and I'm gonna be walking you through it, so you can do it right now on your own and complete it. So let's start. So first of all, I want to start by income replacement, because after all, income is what sustains a household. You know, income is what sustains a household. So you want to provide your family or yourself with 10 years of income for you or your family to be protected. So let's say that you make $50,000 per year. You want to multiply that times 10 years. 10 years because you want to be protected financially for 10 years. So $50,000, assuming that you make $50,000, let's take as an example, $50,000 times 10 equals $500,000. So that is what you would put on the first line. That's income replacement, $500,000 of income replacement. Mortgage or rent. So think about it, and do you have mortgage or do you rent, you know? So think about your monthly payments. How much do you pay per month for your house or for your apartment, for your rent? And let's say it is $500. So $500 times 12, that would be $6,000. $6,000 times 5 would be $30,000. So you're multiplying it times 5 because you want to have a place to live, and you want to live your family with a place to live for at least 5 years. All right? It is crucial for them to have a place to live, right? So $30,000. $30,000 on the second line. The third line, outstanding debt. Do you have any outstanding debt? Credit cards debt, college debt, student debt, or any other outstanding amount of debt. So if you do put it there, I don't know, maybe 10,000, 15,000, 20,000. If it's zero, just put zero. Fourth line, college education. If you have a family and you have kids, you probably want your kids to go to college, right? You probably want the best for them. And let me tell you that college has a cost anywhere from, for a 4-year college, 4-year tuition, it would cost you anywhere from $80,000 to $120,000 for a 4-year tuition. So if you probably want the best for your kids, you probably want them to go to college. So put whatever the amount between 80,000 and 120,000, and just put it there. I'm gonna put 120,000. Emergency fund. The fifth line is emergency fund. It is really important for you to have an emergency fund. What is an emergency fund? An amount of money that you're gonna be able to tap into in case of an emergency. I don't know, maybe a flat tire or something, you know. And it's really good to have at least 25% of your income for an emergency fund. 25% of $50,000 would be $12,000. So put 25% of your income in there. You know, so if you make $100,000 per year, put $12,000. I mean, yeah, $12,000. $25,000. So 25% of $50,000 is $12,000. So I'm gonna put $12,000 there. All right. So line 7, it's total cash needed. So add all of that, and that would leave us with about $670,000. So that's how much I would need. I would need it in this example that I outlined. That's how much I would need of life insurance. So how much do you need of life insurance? All right. So this amount, $670,000, if I buy a policy for that amount, that's how much I would have available in case of a tragic event such as death. If I die, my family would be left with $670,000. So if I buy it today and I die tomorrow, they're gonna be protected. You know, doesn't matter when. It's better to be 5 years earlier than to be 5 minutes late. So if I get into an accident or if I get ill, I'm going to be able to tap into that amount, the face value, to cover for my expenses. However, the best part of all is that if I don't die and I don't get into an accident or get ill, and I live a healthy and happy life and long life, I'm going to be something in place for my retirement. All my premiums, everything that I pay is gonna accumulate cash value, and in addition to that, it's gonna accumulate interest, 6 to 12%, 4 to 12%. Great, right? So let me take me as an example. I have a universal life policy on myself and the life of my daughter, and I don't have a universal life policy on my daughter because I expect her to die. However, I'm going to be explaining to you what I mean by this. So if I die tomorrow, my daughter and my family would be left with $500,000. Awesome. If I get ill, if I get into an accident, I would be able to tap into $500,000 to cover for my expenses. Great. However, if I don't die, or if I don't get ill, if I don't get into an accident, I would have. By the age of 65, I'm gonna have $800,000 in place for my retirement, for me to retire with a peace of mind and knowing that I'm gonna be good. All right. The most important thing here is my daughter. Just because I was able to learn about the best financial decisions that you can take at a really young age. I'm 19 years old. People don't learn this that I'm explaining to you until they are on their late 30s or 40s. So it's crucial. So just because I was able to learn this at a really young age, and I have a policy on my daughter, she's 5 months old. By the time she's 18 years old, she's gonna have about $700,000 in place for her to, I don't know, for her college or for her to start a business. By the time she's 30, she's gonna have about $900,000 in place. You know, she can retire by then, by 30, or maybe she can start her own enterprise or business. However, if she doesn't use that money and it keeps building up, by the age of 65, she's gonna have a couple of million. All of that was because I was able to learn how money works at a very young age. All right, so you have the total cash needed, right? The total amount of life insurance that you would need. Now, line 8 is assets. So do you have any other assets? Maybe a house, cars. Maybe you have other cars, apartments, business. So the amount of assets, I don't know, maybe we came up with $670,000. So if you, let's say you have $100,000 of assets, subtract your assets from the total amount needed, and that is your final number, and that is how much of life insurance you would need. All right. So go through the financial analysis. Do it on your own. There's no pressure. And when you're done, the financial analysis is down below. Just click on it, fill it up. When you're done, submit it, and schedule a call. All right. You're gonna be able to schedule a call. You're gonna get on the line with me or one of our agents, and we're gonna be walking you through a policy. We're gonna be doing a free quote on you, and we're gonna ask for three things. We're gonna ask for your phone number, and we're gonna ask for you to download Zoom, because Zoom is download. Just click on the link and download it. We're gonna get on Zoom because we're gonna be screen sharing with you. So you're gonna be to see our screen through the quote. We're gonna be able to offer you different quotes, different policies from different life insurance carriers. Maybe we represent over 30 carriers, so we're gonna determine which one is best for you, and you're gonna be able to see the whole process of the quotes. So you're literally gonna be able to see everything, you know. And you're gonna see the face of the agent that is going to be explaining to you, and just take your time. There's no pressure. And when you're done with your financial analysis, submit it. If you're interested, download Zoom and schedule a call in the best time that is available. All right. See you on the phone call. Bye.